Jim, let's get some mad dash action today.
Yeah, obviously, if you start thinking about public transit, everything is on the line. There's a stock that was at $439 last year.
Double digit.
This week, $439, and that was Boeing. And now Boeing looks like it's going to be at 100. I think Boeing is front and center. Why? Because Boeing will run out of money. They managed to be able to very smartly bring down the revolver. They have, I think, about $10 billion. But there are 2 million jobs on the line. And I think that when we figure out who to triage, we must save Boeing, so to speak, both from the side that the airlines are going to get money. But if you don't have maybe one of the, if not the most important company in the country, solvent, then I think a lot of things are going to go wrong. If we find out that maybe the government takes a stake in Boeing, maybe Boeing gets some sort of lifeline for the workers, then I think today goes better. If we just decide that Boeing is thrown to the wolves of the market, then, Carl, you and I are going to, and David, we're going to have a very different day, along with 317 million other Americans. So my mad dash is that Boeing and its 17,000 suppliers need the $60 billion. It's not a plea for me. It's a plea for the 2 million workers who are in the supply chain.
Yeah. Jim, it's David. I mean, you know the answer to that. And listening to you ask the question, there's no way the U.S. government can let that happen, is there? Now we can all go back a few months and talk about the problems that Boeing created for itself, a story that we were following every day with the 737 MAX. But it doesn't matter now. Those numbers that you're citing in terms of its impact on the economy, it simply seems impossible to imagine the U.S. government can let this company go, dare I say, bankrupt. And if they don't come to its aid, it won't be able to hit the capital markets. But if they do, it certainly might.
But a line of credit, David, that's advanced by a company created by the U.S. government. And I say company only because I think this is a business, basically, the business of the $1 trillion or $2 trillion, whatever it takes. I'm invoking now Lenin and Malcolm X. This is some morning. But I do feel that it absolutely has to be addressed. Now, David, I would say, what is the priority? It can probably wait till 11:30, 12:30. Maybe that's
today.
Timeline, yeah. I don't know. I'll leave that to you.
Okay, you want to make it 4 o'clock?
This does seem to be it seems to be let's call it a hour by hour story.
Well, how long does $9 billion last in a business where you got to pay suppliers, right? I mean, I think the answer is as long as they have money. But, look, the president, I hope he's watching, whatever, who the hell's watching. But I do know that Boeing is the one that you settle first, not JCPenney.
Jim, so yesterday when we were getting reports floated of $50-60 billion for airlines, and you saw airline shares down, how much of that is related to the fear that if bailouts happen, Common gets sacrificed?
Well, I mean, I think that let's deal with this is a great question, Carl. I mean, I think that the way you can get Congress to budge and put trillion, 2 trillion, again, whatever it takes, is to have it go for the employees. I myself feel that if you pay the employees, you're not necessarily going to do well if you own the common stocks, definitely. But that's something, again, we have to settle out. What I was hoping for is a situation where if you have an entity that we once saved, we know that if the government were to take a stake, 10%, you got to be really creative here, 10% American Air, 10% United, 10% Delta, 10% Southwest, 10% JetBlue, 25% Boeing, whoever else needs it. These companies, when we solve this, and I think we seem to forget that we are going to solve this, and who's going to solve it is American science, it's going to be the greatest investment the government ever made. The companies are all going to stay in business. And then we don't have to think about the who lives, who dies scenario. As long as we ring fence the industries that we absolutely need. Again, I come back to, we all get personal about these things. Do we want to save a company whose clothes end up in a landfill that's made of polyester and it's imported from China? You know what? That's not high on my list. But I do think that what happens here is we need to make decisions, whether I prefer investments, if not investments, then payments to the employees, and then let the shareholders kind of scramble. I don't like that because we're a shareholder-friendly network, but it's the credit side. And I go back to David. You know, David, we look at the equity side and we think, where is it in the pecking order? We know from, unfortunately, bankruptcy law, it's not that high, and we don't want all these companies to go bankrupt. But David, it's the credit side that theoretically has to be protected first.